guys, it's Stock Curry, and we just got our second quarter in a row of negative GDP, which means we are officially in a recession. But if we're in a recession, then why is the stock market rallying? Well, I've got the answers for you, so let's get into it. In order to understand why the market went up today, even though we are officially in a recession, you have to take a look at the 5-minute chart because we can see 4 clear times that the stock market went up today. Now, the stock market initially went down after the GDP report came out and we found out that we are officially in a recession. And at one point, the Nasdaq was down over 1%. But then right before 11 o'clock, right around 10:30, we see the stock market rally. And the reason for that is because the Senate passed the Inflation Reduction Act, which is a silly, funny name to help people feel good. In reality, it was more of a clean energy bill. And that was the initial thing that brought the stock market up. Now, after that, we see the stock market go flat for a little while. And then right at 1 p.m., we see the stock market go up again, and that is when President Biden started speaking. We then see the stock market go flat again, and then right about 2:30 p.m., we see the stock market rise again. That is when Janet Yellen started speaking. We then see the stock market go flat again, and then right at close, we see the stock market skyrocket, and that is when we got Amazon earnings. You can also see a smaller green candle about 30 minutes after that, and that was the Apple earnings. So let's talk about these 5 points one by one, and that will give us a better idea of whether the stock market is going to continue to rally or if we're going to hit a top and we're just going to keep going back down. About an hour before the market opened, the US Q2 GDP came in and it fell at 0.9%. Now keep in mind that the consensus was for us to have a growth of 0.4%. So this was significantly lower, and now that we've had 2 straight quarters of negative GDP, by some definitions, that officially puts us into a recession. And that, of course, sent the stock market down over 1% in the first couple of hours of trading. Then we got passage of the Clean Energy Bill, which was brilliantly titled the Inflation Reduction Act, even though it had absolutely nothing to do with inflation or reducing it. But what it does do is it does reduce the federal deficit by $300 billion over the next 10 years, or about $30 billion per year. It also significantly raises taxes, which is going to be bad for corporate earnings, but it will help out some of the clean energy stocks. So we saw quite a few clean energy stocks rise when that news came out, and a lot of those clean energy stocks are in the Nasdaq, which is one of the main reasons why the Nasdaq rose more than some of the other indices when that news initially came out. Now, after that, we got further increases from Biden and Janet Yellen. Janet Yellen is our Treasury Secretary here in the United States. And essentially what they both said is that we are not in a recession. So this begs the question, what is a recession and are we in one now? Since the economy contracted at an annual rate for 2 consecutive quarters in a row, that meets one of the most common definitions of a recession. But the United States is not officially in a recession until a recession is declared. And the task of identifying recessions is left to a little-known panel at the National Bureau of Economic Research, or NBER, which is a nonprofit academic group. Recession dates are determined by NBER's Business Cycle Dating Committee, which is a group of 8 economists at universities around the US. Now here's the kicker. They typically make the determination months or even years after a recession ends. So there's a really good chance that we will not have an official declaration of a recession here in the United States until the recession is already over, most likely sometime in 2023. Just like in 2008, they did not declare a recession until it was pretty much over. And then they said, well, we've actually been in a recession since 2007. And again, even in 2008, all of the politicians and everybody were saying we're not in a recession. don't worry, not a recession, vote for us in November. And then December came and they finally officially declared a recession. So I don't think we're going to get any official declaration of a recession until December at the earliest, but probably not until 2023 once the recession is over. Now, you saw on the 5-minute chart how when Joe Biden started speaking and said we are not in a recession, we saw the stock market rise. And we also saw the stock market rise again when Janet Yellen spoke. Now, Joe Biden and Janet Yellen both said the exact same thing. They both said that we are not in a recession because the job market is strong. Now, this is really sketchy because the job market is part of the GDP. The job market, the labor force, goes into the amount of production that occurs in our gross domestic production, or GDP. Without enough people working, there's not enough GDP, which normally is why when you get massive layoffs, you have negative GDP. But we have negative GDP with what is, to be honest, one of the lowest unemployment rates we've ever had in this country. So why are we still getting negative GDP? Well, the reason is GDP is an encompassing collection of a lot of different data points. And essentially what Joe Biden and Janet Yellen are doing here is they're looking at all the data points. And there's like 8 data points that are negative and 1 or 2 that are positive. And they're saying, ignore the overall GDP, which, by the way, includes jobs, and let's just focus on this one little positive piece. See that? See that? We don't have 100% of the economy negative. We still have good jobs. So therefore, there's no recession. Just ignore the GDP numbers, ignore the fact that it includes jobs, and let's just focus on the fact that we have one small piece of the economy that's still positive, and because of that, there's no recession. I'm declaring it. That's it. It's over. No recession. Come vote for us in November. That's literally what's happening. Now, I will say that Janet Yellen went a little bit further in trying to explain why there was not a recession, and I really want to focus on the one additional point that she made. Janet Yellen said that the inventory swing was the key culprit behind the Q2 GDP being negative. To be specific, slower inventory accumulation subtracted 2 percentage points from the output in the second quarter, meaning GDP would have grown had businesses not been trimming their stockpiles. Now that sounds really good. It sounds like, okay, well there's just this one rogue thing that caused negative GDP. Had we not had that one rogue number, we actually would have been good. And honestly, it's just huge misdirection. Because the reality here is, you really have to ask yourself, why did inventory growth slow? Why was there a 2% contraction in the amount of businesses buying inventory? And the answer is because consumers are buying a lot less goods and services. And as I explained in a prior video, warehouses are full. We've already had Walmart and Target come out and say that they've had to significantly cut prices in order to get rid of excess inventory. And like I said yesterday, because warehouses are already full, that means that businesses are not buying as many goods, which ultimately hurts producers of those goods, which ultimately hurts gross domestic production. So, it sounds good to say there was this rogue data point. The reality is, the data point was not rogue. The data point is a huge red flag that the economy is not only bad, but it's about to get worse. This will mean that revenues should continue to decline significantly and profits should continue to decline as well. And that is exactly what we have been seeing in the earnings report so far. And you're also going to see that in a minute when I show you the Apple and Amazon earnings. But before we get to this earnings, I want to dig a little bit deeper into the US economy and understand the fact that whether you want to call this a recession or not, the recovery has ended and a slowdown is here. Key indicators of economic activity have ground to a halt. Total spending by households and businesses did not grow in the second quarter, even after averaging 6% annualized growth in the prior 6 quarters. And again, this slowdown in spending is causing our inventory issues. Monthly data suggest consumer spending is flat or falling, especially on goods and not just big ticket durables. Again, this is part of the inventory issue. There's nobody to sell the inventory to, so there's no reason for retailers to buy inventory. Thus, we are getting our negative GDP. It's also interesting to note that spending on groceries is actually down over the last 6 months. This really points to the fact that not only do consumers not have any money to buy goods, they also are running out of money to buy groceries, meaning they've had to cut back on the amount of groceries that they're buying due to the high inflation from energy, rents, and other things, and the fact that wages are not going up fast enough to keep up with inflation. Consumer spending is down because they are running out of money. And this inflection point is worrisome. It is not a short-term blip. It was deliberately engineered by the Federal Reserve to reduce inflation. On Wednesday, Chairman Jerome Powell said, "We think we need this slowdown. We need a period of growth below potential in order to create some slack so that the supply side can catch up." Jerome Powell has been very clear that the Fed is going to deliberately cause a recession in order to slow down demand due to the fact that we have significant supply chain constraints in the economy to this day. And since our supply chain constraints are not getting fixed and supply side is not increasing, rather than fix the supply side, we're just going to cause a recession to get the demand side down, lower demand, and that way prices will come in line and inflation will go down. And Jerome Powell's absolutely correct. You absolutely can get inflation down by significantly lowering demand, but doing so causes a recession. Now, all of these recession worries are a major problem for Joe Biden and Democrats, especially with elections coming up in November. And that is why we are seeing politicians, including Joe Biden and Janet Yellen, coming out and saying we are not in a recession, no way, no how. Ignore the negative GDP, ignore the official definition of a recession, and just trust us, bro. And clearly, with the stock market up today, both the White House's and the Treasury Department's manipulation of the definition of a recession is working because the stock market is rallying. And we also saw the stock market rally after hours, which I'm about to get to in 1 second. But first, with all of this bullishness and what appears to be a non-stop bull run, I want to go look at the chart and try to determine how much higher the stock market could go. Now, it's clear that we are still in a bear market, and with earnings continuing to drop and revenue continuing to drop, there is no possible way we are getting back to all-time highs. That said, we will certainly have these short-term bull runs or relief rallies as we're getting right now. In fact, back in March, we had one, and it was pretty significant. So how high might this current relief rally go? Well, just based upon the technicals here on the QQQ, which is a NASDAQ 100 ETF, QQQ could very well hit about $325 before topping out. And if you do the math on that, it's about 4.8% up from where the market closed on Thursday. So there's definitely still some room for the market to run up, but it is going to hit some very strong resistance once it rises another 4.8% from where it closed on Thursday. Now let's get into Apple and Amazon earnings so that we can understand why the stock market rallied after hours. Apple reported an 11% decline in profit, and the stock was up 3% after hours. Now, the reason Apple stock rose after hours is because expectations were for a more significant decline than what Apple actually reported. And based upon the expectations, Apple beat on both earnings per share and revenue. So overall, the expectations were quite low, and Apple beat those expectations, thus why the stock was up 3% after hours. Amazon, on the other hand, posted a net loss for the second straight quarter in a row. And Amazon stock was up 13% after hours on that news. Yeah, that's right. A 13% rise after reporting a second quarter in a row of a loss. Now, I went back and looked at the last 4 quarters, including the one they just reported on, and their total earnings per share for the last 4 quarters combined was $1.11. Now, based upon where Amazon closed after earnings at $139, if you take that $139 and you divide it by the earnings per share of $1.11, that gives you a PE ratio of 125. I don't know about you, but I thought we were done with these insane PE ratios. I did not expect any stocks to be at 125 PE ratio in the middle of a recession. That said, I think it's clear that markets can be quite irrational. And the fact is that a stock price is almost never equal to the company valuation. Stock prices are almost always either extremely overvalued or extremely undervalued compared to the actual valuation of the company. And certainly, with a PE ratio of 125, going into a recession with continued decline in earnings, there is zero doubt in my mind that Amazon's stock is severely overvalued. It is for that reason that I plan on opening some bearish positions on AMZN. Now, if you want to know everything I'm buying and selling, you can come join us in the VIP Discord, where I post all of my trade alerts before they are actually filled, and I give you my full reasons on why I am buying or selling certain stocks. Now, I don't get every trade right. Nobody does. My only goal is to get about 60% of my trades right, because I know from experience that if I can just get 60% right, I will make money in the stock market, and you can too. The goal isn't to be perfect, it's to beat the market. So if you want to know everything I'm buying and selling, come join us in the VIP Discord. We only have about 200 slots left at the $25 a month. After that, the price goes up. I also have a full training program in there, so if you want to learn how to trade options, especially multi-leg options, if you want to learn how to do technical analysis or fundamental analysis, I have training for all of it in the VIP Discord at just $25 a month. Come join us over there. You can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Sign up before the last 200 slots are filled. Alright, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all. I wanted to let you know that I am celebrating my anniversary this weekend, so I will not have a video for you on Monday. I will be back with you all on Tuesday. I hope you have a lot of success trading, and I will see you on Tuesday.